Welcome to This is Concrete, a podcast where we speak with the people whose work revolves around concrete and coatings. Let's get to what you came for.
Hello, welcome. My name is Chad Gill, and I'm the host of the This is Concrete podcast, where I talk with leaders in facilities management, architecture, contracting, and pretty much anything around it. This episode is brought to you by Concrete. Concrete is a concrete polishing and coatings company with nearly 20 years of experience working in commercial, industrial, and residential markets. So whether you need smooth transitions for warehouse traffic, a show-stopping lobby floor, or a seamless concrete accent wall, we can provide the skill and imagination you need to make your concrete uncommon. So what are you waiting for? Visit us at thisisconcrete.com to learn more about Concrete today. So today on the show, we have Ashley Ingle. She's based out of Flower Mound, Texas, and she is the CEO of Profit Matters. She provides accounting experts to companies and has been doing this since 2018. She's a serial entrepreneur, and she holds a master's degree in business, is a CPA in Texas, and has experienced 2 successful exits in manufacturing and construction businesses. Her story is awesome. I can't wait for you to hear it. And then figure out how we can work with people like Ashley to make our companies chase down the line of what you did. So thanks for coming on. I really appreciate it.
Thanks for having me, Chad.
So you look exactly like every other concrete contractor I've ever talked to. Totally, absolutely a female-dominated industry. How did you manage to come to that?
I exited another business. Somebody came to me and said they had a cash flow problem in their concrete business. Imagine that. Just about every subcontractor has a cash flow problem. And I took a look at the books, was going to help him wind it down, and said, hey, I would be happy to acquire your business for a small price and continue on and see what happens.
And so how old are you when you do this?
27 when I acquired their company.
That is amazing. It was his response, probably, are you sure? I mean,
he said, you've done such a great job here. Maybe you can do it. And so I feel like he thought, okay, having had the exit, she's going to put the cash in the business and she'll figure it out from a sales standpoint. Just had no idea what I was getting into.
No, how many of us really do, though? So true. So that's great. So you fast forward, you turn this business around, you grow it tremendously. Great story. Meet the right people at the right time to kind of, that's the nice thing when people are put in your path and you're smart enough to listen and also to act. I mean, that's fantastic. And so how did you like construction coming into it from where you were? And, as a CPA, we're just kind of like, man, what in the world? What kind of things caught you with that?
Yeah, so the manufacturing company that I had worked with that we sold, we worked primarily in churches. So you're used to, if anything goes wrong on a job, people say, let's sit down, let's talk about it, let's pray about it. When something needs to be changed, you say, okay, we're changing. Here's the design change. Will you sign off on this? When you show up on the job site, everybody's excited to see you. And in the concrete business, what happens is you come to the job site and you have a GC standing there with the superintendent, arms crossed, ready to kick you off the job on day one. It's like, why'd you even show up, So you get here and it is just down and dirty. It's everybody trying to make an extra dollar, trying to squeeze out margin. This wasn't in our scope. I need you to pay some extra money, and nobody wants to do it. So coming from, I would say, a soft industry, soft construction manufacturing into the subcontractor, commercial, general contractor space. I mean, it was mind blowing.
Oh yeah, no, it is shocking. It is. I came from very big business. We went and did things, and I didn't have to be involved in that. And then you get to this, and you're like, what do you mean? What do you mean you're not going to pay for that? You need to pay on it. And it's like, well, there's this clause on the 38th page, and it's very
right.
small, but you agreed to it. And you're like, oh no.
Yeah, it makes you feel really naive. For me, it made me think. My whole life, I've thought people want to be good to each other, and it was the first time I thought, oh, I don't think these people have my best interest at heart. Everybody's trying to make money for themselves.
It is, and you go into it knowing it, or you end up in there, and it becomes recognizable. And then things like contract negotiation come up, regular relationships and stuff like that. And it can make you a little hard and a little, kind of guarded and coarse as a person, but there's also still a whole lot of satisfaction in the industry. Yep. And a whole lot of, a lot of teamwork. And there's things like when you get on a good job, it's a great job. You get on a bad job, it's terrible. So that fast forward. So it's successful. You exit from that one and you start Profit Matters. So it's just kind of taking the lessons you had there and just applying them in a specialized suit.
Yep, absolutely. So taking all the things that I learned that were really difficult and being able to help other business owners, it was an opportunity for me to live out my purpose and passion. And I would say that is to help other business owners not make the same mistakes I made. I think if we can help a business do better, it increases the business owner's quality of life. So we tell people that when we hire them at Profit Matters, the whole purpose of this business is to provide a really good experience to the employee and the client and really improve the quality of the business owner's life. If you think about it, when your business does better, Chad, you live in a nicer house, you drive a nicer car, or you do more of the hobbies and activities that you want to do. You get to recover some time that maybe you've lost. You spend more time with your kids, whatever it is you want to do, because your business is able to provide that luxury to you. So the better your business does, I think the better that your life looks to you or feels, right? Because we all know when our business is doing really bad, it affects our relationships and everything around us negatively. So that's what you. I mean, that's the whole purpose, is to go out there and figure out what can we do? How can we figure out how you can estimate better? So when you get on a job and you get into a bad situation, you don't lose, that you have enough baked into the job that you're always still on the winning side.
So when you talk about estimating, I know you guys do a lot of different things. When you're talking about estimating and, you hit a lot of, start getting into some tough spots where you're like, okay, sure, this is how much it says I need to charge, but I can't get the job if I charge that amount, so that's what leads to that whole, I've got to get a change order in order to make money on this job kind of stuff. Mm-hmm. How do you balance that? What do you tell clients when they're coming to you and you're saying, or I guess, when you look at them, like generally, what is the first place you target where you say, oh my gosh, we have to clean this up? Your most common things you run into?
I just did this where I looked at some financial statements with the construction company. And when they're all laid out and we know what kind of margin we want to make, gross margin and on the bottom line, it's easy for us to see, are we over because we have too much in our fixed costs, or are we over because we're not estimating properly? It's really easy to see that when you look at the financial statements. If you wanted a gross margin, let's say in construction of 30%, and maybe you thought that your fixed costs were 20 and you'd have 10 on the bottom, that's kind of something that we would see typically out there. It's easy for us to go, oh, your cost of goods are too high. And so when we see your cost of goods are too high, we know a couple of things. Either you're paying too much for materials or you're paying too much for labor. And then we start trying to figure out where that gap is and where we need to raise prices. So there's a couple of things. We can either say we always pay too much for our dirt work, right? And okay, so we need to look for another company that's going to do dirt work for us that's more affordable. Or we have to raise the price of dirt work in our estimate. The number one mistake that we see contractors make in their accounting is not keeping track of their cost codes and their phase codes. I want to run a project and I want to see that by product and service. And I want to be able to see, this is how much we spent, let's say in concrete, on forming. This is how much we spent on rebar. This is how much we spent on pouring concrete, and the different things. A slab versus a sidewalk, right? So you think of even a contractor we talk to in plumbing, we want to know how much you spent on your materials and how much on labor, but on what parts of the project. So it's all broken down. And then we can easily say, hey, Chad, you know what part of the job that you never make money on? It's when you're grinding the floor. When you're polishing, you're killing it, but you have to raise prices on grinding, or you have to find guys that do that for a cheaper price.
So cost codes I'm aware of. Phase code, haven't heard that one yet.
Yeah, so the phase is the part of the project that you're on. And so let's say in commercial concrete, right? We're on a phase of the project like sidewalks, like slab, so different things. And so our cost code might actually be that we have rebar, but we have rebar for a slab and we have rebar for a sidewalk. So
Oh.
that combines your cost and your phase.
And I can see where that would matter, because putting rebar on a large slab much faster, much lower cost probably for labor than trying to tie up a wall or tie up a sidewalk or anything, much smaller.
Exactly.
No, that makes total sense. That's finished. So you say that in your bio, which is great. You talk about your number one strength finder is discipline. So making both routine, making everything around you routine and structured. I love that, as long as it's not applied to me. So much like every other owner, I'm sure. But it's great. We just went through a business systematization, where we documented all of our processes, and it was one of those things you felt like you needed to do, kind of like working out, but it takes a while to see an actual result from it.
Yep.
And we're starting to see that now. But what do you mean when you're talking about routine and structured, as far as when you're talking about bookkeeping or job costing or financial management?
I don't do a whole lot of work, let's say, anymore. When we talk about book work, that's our staff doing most of that work.
Sure.
But when you talk about me being routine and structured, and even thinking about accounting, things being repetitive, when you're doing things over and over again the same way, and then the cost of bad bookkeeping, right? So if you have to undo something, it costs way more. You know this in concrete. It's something, if you pour something bad or you grind it bad, you're usually taking it out and starting over again. You can't actually fix it. And so it's the same thing in bookkeeping, where I think people assume, okay, I can do it bad, and then someone can come in and kind of patch it up. But really, a lot of times it's going back and redoing it. And so having a good process in place, but also having a professional that really knows what they're doing, will save you a ton of time. And I started thinking this week, Chad, and I haven't got to talk out loud to anybody about it, but just the cost of doing something wrong in accounting and how that flows over. So somebody was talking to me about a tax return and said, if last year's tax return is wrong, then this year's tax return is wrong because it has the wrong starting point. And so you think about, oh, well, I got a new CPA and my new CPA is great. And so all my tax returns going forward are great and they're perfect, right? But what about the historical ones? And what's the actual cost of having that wrong? So if your bookkeeping was wrong, your tax return was wrong, and it could not only cost you like the penalties and fees that you think about, but it could cost you a huge deduction, like something that could be like a big carry forward, or maybe there was a different way to treat something, however it was. And so when I think about discipline or routine and structure, I think about just doing things repetitively the same way, following a process, like you're saying, it's documented, and enjoying following that process, like kind of following the rules, if you will.
No, it makes sense. It's kind of like, we're coming off of Olympics. If you got to, if you're running, you have 4 runners and everybody's got to make a lap. You can be the fastest runner on the team, but if the other guy was slower or the other girl was slower, you can all lose. And it just adds up, like what you're saying. For sure. So what parts of this, when you're talking about contract, we think about bookkeeping, but there's a lot of aspects to bookkeeping. So what parts of it, like when you get into, what is it exactly that you're outsourcing, I guess, or your I guess outsourcing is the right word for this, but is it I know there's bill.com and you can pay your bills, and I could manage my own bill.com. I just wouldn't be very good at it, and there's lots of ones other than bill.com. But so you got bill payments, you've got loan payments and stuff like that. But then there's, and I guess maybe it's important to sideline question. It's a super long question. I'm sorry. But like how important is it that you are construction minded in coming into a construction company to find things like, like change orders and AIA billings and chasing money, all of that. Gosh knows if I could outsource chasing money, that'd be fantastic. But,
Yep.
What kinds of things like that can you do that people don't normally think about?
Especially when you think about commercial construction, you think about retainage. So we do prepare pay applications. It's more than, so I'll just go from the beginning. We usually kind of say we have bookkeeping and then accounts receivable, payable, payroll. We even sell it like that in our scope. And no matter who's doing it, whether it's us or another outsourced construction accounting firm, I'd say starting with the bookkeeping, it's making sure that all the expenses that are related to a job have a job name and a cost code, like we talked about. Following down to AR, it's knowing how to do those AIA pay applications and knowing what your retainage is and trying your hardest to negotiate that retainage. So we get in with people that say, man, they always hold 10% retainage, but they're one of our best GCs to work with. It's like, okay, so we've been working for them for 5 years. They really love us. They're sending us a lot of work. Let's go talk to them about changing our retainage to 5%. This shouldn't be a big deal. 5% of a big contract is huge when we're talking about cash flow, like huge. So we have somebody who's doing those pay applications, who's looking at the retainage, knowing how much cash we need to be able to cover a job before we start it, expecting us to not get retainage 12 months, maybe 24 months out, however long it's going to take for this job to finish. Looking at that on the bill pay, looking at the bills by project. So we know we've been paid for this job. Now we can pay, right? So we're not paying bills when they become due. We're paying bills when we get paid to reserve, to save our cash flow and making sure that our lien waivers are good. We're filling out lien waivers. We're notarizing those. We have payroll, we can do certified payroll, making sure that we have all of those things kind of encompassed all in one.
So how do you capture when you're talking about cost codes? How many cost codes are you talking about? How do you capture those and make sure that the data you're gathering is worth the effort?
We're a big proponent of Procore. I love Procore. If you're big enough to use it, I think it's great. I like to use Procore's website, no matter who you are, just to go there and grab phase codes. They have a great list to go and grab from. But there's typical, like we hear, concrete called Division 3. So you can Google, anybody could go out there and do this. If you're not sure what phase codes or cost codes you need, go Google. If you're a plumber or you're a concrete guy, whoever you are, Google your division and look for cost codes and phase codes. People say, okay, you can't do construction and QuickBooks Online, but you can if you use products and services. You can separate it with a phase and a cost. So you could have all your different parts, because it allows you to make a header basically and then a sub of a service item. So you can have your products and your services all listed out, and it works very well together. You can put those on bills. You can put those on invoices. So when you go and look at your P&L by customer, sort that by product and service, you can really see what's been happening in each segment that matches your estimate.
So that's again another whole thing where you're talking about adding things up. In our software, the app that we run and for our company, it's we do the same thing. We generate a scope, and every scope involves, here's what we're doing, a list of processes, and where we're doing it, and then the guys in the field, if it's set up correctly, and it's tracked in the field, that the guys are just updating, throughout the day. Hey, we just completed this, we just completed that. And so that would go back to your phase and stuff. And then I'm assuming, like in your situation, that's kind of pre-populating your AIA billings along the way as you're going.
It is for sure. Yep. If you have your scope laid out correctly, all that your accountant should need to know is, what do we have as far as percent complete on the job?
Well, that's one this is where I wish we could pull up and show, because that's such a huge relief, because I don't know how many times I've talked to contractors and been the contractor who, it's the 24th and you're like, oh my gosh, my bill is due. How far are we on this job? How far are we going to be by the end of the month? How much can we bill? And then, and then also you want to front load bill and stuff like that. So it's huge.
Yep.
As far as that goes. So you get that data and now you know where it is. And, we hear a lot about budgeting and forecasting, but what you're talking about is cash flow, which is, that's today, that's today, tomorrow, this week kind of things for making payments and stuff like that. And that retainage, like in your model, 10% retainage, that's all of your profit.
Right. Right.
And
Here's the deal. This is no joke, Chad. Sorry to interrupt you. Contractors will call us, a subcontractor, and they'll say this. They're like, can you look at my budget with me? And we're like, so what do you think you're going to make this year? We're going to do 8% on the bottom line. Boom. We're going to do, and they're excited, right? They're like, okay, we're going to do $10 million, 8% on the bottom line. Like, we're going to do really well for ourselves this year. Plus we have our salary in there. They're like pumped up. They're like full on construction guys. And I'm like, well, how much is your retainage? And they're like, it's 10%. And I'm like, how many jobs are we going to do this year to equal that 10 million? And how fast are we going to do them? And so then you see them like go, oh, because then immediately we are -2% every day, like just right out of the gate, right? And so how do you recover from that? Because what happens is as you continue to grow, that number grows dollar-wise because you're taking on more work, and you're always in the negative. It's crazy.
Yeah, I think I've told friends a number of times, I'll retire and I'll continue bringing in retainage for 4 years.
It's true.
It's true. That'll probably be the wealthiest I'll ever be. But yeah, so do you find that when you're dealing with contractors, do they have luck in finding ways to do that? Do you have changed prices? You change cost of goods? Or is it just an all-encompassing thing that you run into?
I think it's all encompassing, and I think that it's really the safest bet is to take on projects that are more profitable versus just trying to buy work. And so I hear this word a lot in construction where people say, I'm buying work to keep my guys busy. I'm sure you hear that a lot.
Oh,
so
yeah.
what they're doing when they say that, for anybody listening, is they're bidding a contract at 0% or maybe 2 or 4%, just so they fill in a gap to keep their crews busy so that they have those guys when they get on other projects. But our smartest contractors are the ones that say, I never want to be $100 million or a $50 million business. I'm really happy with my $5 or $10 million business that makes a 10 or 12% margin on the bottom line. We look at general contractors who do $100 million on the top line and 1% on the bottom. That's a whole lot of risk.
That is a tremendous amount of risk.
It's crazy. I would recommend you look for jobs that are more profitable, bid the right margin, stop buying work so that you can make money in your company.
Yeah, and it makes sense, and you hear it, but you do get caught up in the idea of I've got to keep my people busy, I've got to keep going. But when you're talking about what you're saying, if you buy it at 0, you're 10 behind, so you're losing 10% of the total job cost for that year. It would almost be cheaper to pay them to do nothing than it would be to pay them to be on a break-even job, because you're going to lose them. They're not 10% of you for that whole job.
Yep. Also, you can fill in the gap with small jobs that have a big margin. So we have contractors they'll win a $2 million job, and that $2 million job will keep them busy for, let's say, 6 to 9 months out of the year, right? And so they have all their guys on that job, but then they worry, well, what am I going to do for the other 3 months? And sometimes when we can even, make that job go faster, we make more money, or sometimes we'll throw some extra guys on it for a certain phase of the project. And then that part of it goes faster, which speeds up the whole thing going to the end. But then what do we do with those guys in between? And it's an opportunity for us to go and say, we don't have to always have a $2 million job or a $20 million job, but let's go get a $20,000 job that lasts us a couple days. Let's bid a $200,000 job. There's this sweet spot we've been finding in construction between $100,000 and $400,000 that has a bigger margin. It's really interesting. And so those jobs go faster. They're like a 3 to 6 month project, and they usually have a bigger margin.
So is this something that the type of insight that you're talking about, it's financial insight, it's guidance and stuff like that. This isn't bookkeeping then. This is like fractional CFO or something along that lines, isn't it?
Yeah, we do a lot of that. So we prepare an annual budget. We have something called the CFO system. It's a workbook to work through. I think the number one mistake that contractors make, anybody who's hiring a fractional CFO, is Chad says, hey, we really need a CFO. So you figure out if you can afford one in-house or if you go get one. Sometimes if you'll go fractional, you can get somebody who's maybe more knowledgeable than putting somebody on staff for the same price, however you want to look at it. But let's say you go out and get somebody and you bring them in, Chad, and they say, what do you want us to do? This happens here all the time. Used to more than ever, right? And you say, I've got this list of tasks I've been thinking about getting a CFO to do. And we become what I call your go monkey. And so we're going out, we're doing all these things that Chad's asking us to do. Go contact these vendors, negotiate these prices, look at our estimating spreadsheet, all these things. At the end of the year, you're like, Ashley, I don't know what you really did to change anything here. We're still kind of doing the same thing we've always done. Our margins maybe improved 1 or 2 points, but mean, it's just like, I thought I was going to get something real from you. And so when I realized that in this business, I went, oh, okay, we're the experts. We're the CPAs or the CFOs. So we got to tell Chad what he needs to do in the accounting space. So we say, hey, Chad, hold off on your list. Let me know what kind of fires we need to put out. Let's try to minimize that. But let's talk about what you want to happen what you want to happen in your business this year. So are you trying to grow this to sell it? Do you want to leave it to your kids? Are you trying to reduce your tax burden in another business? What is the goal here for you in this business? We document that. We meditate over it. We think about it a lot. And we say, okay, Chad, this is how we're going to help you get there. And then we look at your pricing, and then we look at your estimates, and we go, do we need to find other vendors, or do we need to just raise our pricing? If we have the best dirt guy in town and that's going good, let's raise our price for dirt instead of replacing him, right? So we start looking at all those things. So we have these series of steps to work through. So at the end of the year, we can say, okay, Chad, we really made some progress because we followed a system and a process, versus you being like, you come flying in the office today and go, hey, Ashley, I think you need to call our dirt guy and tell him he charges us too much money. It's just because you had that kind of gut feeling, or you saw one job go wrong, versus having a CFO to go, here's the data to prove this is what we need to work on.
And I wouldn't even begin to know how to start. I mean, I'm like, oh my gosh, I totally want one of those. and I'm glad somebody else refers to him as the dirt guy too. All through school, we had civil engineers and mechanical engineers. I was mechanical, so we always called them dirt engineers. And I was like, yeah, that's great.
I love that.
That's wonderful. I will take that out with me later today. But it's knowing what to ask for, being able to say, it's figuring out that right language. It doesn't mean, you're just literally ignorant about what can be done or should be done. And you hand them your own little monkeys, like what you said, and you're like, hey man, take this monkey off my back, but it's still a monkey. It's not fixed.
Right.
That is fantastic. I really appreciate you coming on. So if somebody wants to reach out to you, so that's profitmatters.co, right?
Yeah, you got it. Yeah.
Profitmatters.co. And I was trying to figure out if I had mistyped the M on the end. So we're good. We'll put a link in. That way nobody can mess it up.
Thank you.
That's terrific. I really appreciate it. And I think I now have a whole nother array of questions that I probably want to try and talk you into coming back on and answering about this whole CFO thing, because I think that is something really interesting. We used to we thought a CFO was a lot like the elf on the shelf. It was just a guy that told you can't buy things. So we'll see. Maybe it's a little bit different than what I thought.
Love it.
All right. Well, thank you very much. I really appreciate your time, and hopefully we can connect again soon.
Absolutely. Thank you, Chad.
Thanks for listening to This is Concrete. We look forward to you joining us next time. Be sure to click subscribe to get future episodes.